Hello everyone, I'm Mark Zane and welcome to Zane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 37 of the Forex market review. We're going to have a look at a trade which we've been in and a couple trades which are setting up. So let's go have a look at those charts. So this week being week 37 of the Forex market review, firstly we're going to take a look at the gold. And I mentioned last week that we look at that gold could be setting up for another push back higher after a bit of a retracement. So what we're seeing is this large move up here. Then we see that sort of a nice spike up higher with a bit of a pullback coming back to these support areas and looking at pushing back higher, hopefully back up into these resistance areas again. Dropping down to the daily chart, we would have seen this large AO, or this is a 4-hour chart now, large AO with a bit of a pullback, looking for a bit of a bounce off this 200 EMA blue line. So that was the opportunity we were looking for another pushback higher. Then dropping down to the 1-hour chart, we're looking for our entry. So before we look at taking entries, we want to see our divergence. So with our lower low in price and our higher AO, that gives us an indication that it could likely be pushing back up for one more move higher. We then saw it step up, down and up again, with this large AO being what we would call wave 3. So putting down here would have been the start of wave 1, pushing all the way up until these levels. Then we would have had our pullback for wave 2, coming back to these levels here, all the way down to here, and then wave 3 pushing back higher. So what we do is we grab our Fibonacci retracement tool from waves 1 and 2, and we want to see the pullback come to about 61.8. There's a 61.8 line. It came to the 78.6. It just can't break the lows of the start of wave 1, which it didn't. It then started to push back higher. Once we see the large AO, that's generally the first area we could look at getting a trade. We want to see that pullback. So we do the start of wave 3 to the end of wave 3. We know the end of wave 3 after this AO's come back below the 0 line. So roughly around this point here, we then look left in an up movement and we would draw the Fibonacci retracement tool. We then need to see it pull back to a minimum of 38.2. I like to see it come to about the 50% mark, and then it's come down and it's hit the 200 EMA line also on the 1-hour chart. Then want to see a spike up with some entry into the market. So you probably would have entered the market somewhere around these levels here. Put your stop losses somewhere down here if you're being very conservative. Wave 4 can't come back into wave 1 territory, generally where it is, or at least the candle can't close. So I had a tight stop loss personally myself. I put it down here of about 150 pips, trying to go for 200 and something to the top and a little bit higher. It's going 1 for 2. Unfortunately, this big spike right here pushed me out of the market, and that occurred only like an hour or so ago. And that was unforeseen for me. It's actually pushed down, stopped me out, and then it's closed back higher. Potentially, it still has room to move. If you're playing a very conservative, which I advise a lot of you in the beginning, you would be putting your stop losses below the start of wave 1. So you'd be risking something like 250 to 270 pips, and generally going to 1 to 1.5. When you get a bit more experience, you try to play the market a little bit more. Unfortunately, this did not work for me, but gold could still push higher. So that's something to think about, depending if you're still in the market. The next trade I mentioned also last week was the US 30, looking at selling that one. So what we're looking for is divergence. So first we had our divergence moving higher with a higher high in price and lower AO. On the daily chart, drop down to the 4-hour chart. Again, we had our higher high in price with our lower AO. So that was on the 4-hour chart. Then we dropped down to the 1-hour chart. Let me just scroll back a little bit to where it would have occurred. And then we had our higher high in price and our lower AO. So that's giving us a lot of indication that it's going to be pushing back lower. So what it did, it's come back, found support, bit of a retracement back up. Depending on your type of trading strategy, some people like to come down, see it hit support levels, come back up, put stop losses somewhere up here around 200 pips, and you would have made easily your money down to these levels here. If you like me, you'd want to see a bit of a wave cycle movement. So what I'd like to see is the one starting about here, come down for the pullback for wave 2. That's its pullback here. It never broke the highs of wave 1, so therefore that's still wave 2. We then have wave 3, push back lower. And what I'm looking for, I'm not really worrying about this movement here, I'm looking for that first large AO, which I've seen here, a big large AO push back lower. Draw my Fibonacci retracement tool in, looking for a pullback around the 50%. I can see on my DSR indicator, which you can purchase from our website, advising me that there's a lot of resistance here. So it's come back in. It's also come to the 200 EMA. So around about these prices where I enter the market, and then you're putting stop losses somewhere up at these highs, worst case scenarios, or you would be a bit more conservative, 200 to 300 pips. Now it's pulled down about almost 300 pips, so you would easily made 1-to-1, where you should be bringing your stop loss to break even, and that's what I've done. Brought my stop loss to break even, and then going to be riding a lot lower. So where am I riding it to? Again, once you've got into the trade, then use your Fibonacci expansion tools from the high to the low, back up to the high again, and you look for a Fibonacci expansion 100% level, roughly around there is where you want to look at taking the trade. You then zoom out to see where it's bounced a few times, and you can say to yourself, it's bounced a lot of times there, so definitely look at getting out around those levels here. The DSR indicator is indicating a bit more lower, down to the Fibonacci 127 level, a little bit lower around there, 161.8. It depends what you want to risk. If you're entered up in here and you're risking 200 to 300 pips, down to there you can make 500 pips. So there's either your 1 to 1.5 to 1 to 2 risk to reward. And we don't like to get too greedy with our trades. And just watching the market to see if it pulls back, having your stop losses now at break even, at least you won't lose any money. So that's a position I'm in. Unfortunately, gold hasn't delivered, but US 30, I'm at break even. So at the bare minimum, and hopefully trying to make 1 for 2 to cover that loss and a little bit extra. The last trade I'm looking at is the pound USD. That one's just occurred overnight. As we can see on the daily time frame, this large AO, we wanted a pullback. So we're probably grabbing our Fibonacci retracement tool. We're looking for pullback around the 50% mark, so roughly around there. If you're trading on the daily time frame, it hasn't done that. So on a daily time frame, you wouldn't be looking at selling this market. However, for me, I can see this DSR resistance area. It's come back, it's tested it twice, and it's now pushing lower. So on the 4-hour chart, I had my divergence. So I'll just zoom in. I had my higher high in price with my lower AO. Now the AO was just low enough, so it's still lower, so still technically there. Drop down to the 1-hour chart. Higher high in price with my lower AO. Remember, looking for clear divergence. That's where it comes back below the zero line before going back above. That's clear divergence. A hump within a hump, such as this one here and this high here, that's divergence, but it's not clear. It's got to come back below the line and then back up again when you're looking at selling. So now that I have my divergence, what do I look for? My wave 3, and that's the first largest AO. So here's an AO, but this is the first largest AO. You can see this one was similar to this one here, but it's not large. See how this one's way larger than these other ones? So this is your first large AO. We're looking at our Fibonacci retracement tool from the start of wave 3 to the end. We're looking for a pullback around 50%. We have our 200 MA line dropping down. So by the time this pulls back to these levels, this is probably going to pull back a bit more. So roughly around there, you might be looking at putting stop losses up here, risking maybe 100 pips to get out down the bottom of about 200 pips. So risking 100 to get 200 down to these levels. Where do we think it's going to go to? Again, once it finally pulls back, this has come back to the zero line, then we know this move has ended and we're seeing a zigzag back up. However, let's assume this is the movement, the low it's going to go now. We go from the high to the low and then back up to where the next high is, and that's going to be roughly around this 50% mark. So again, the 100% expansion level is also indicating down the bottoms here, where I said you could risk 100 pips to make your 200 pips almost. So that's where you would want to be looking at getting out. Zoom out if you want to have a bit more of an overview. Always best to zoom out. Definitely if you want to try to risk it a bit more, you want to get out before the bottom's down here. Therefore you would be looking at, say, risking 100 pips, and if you went down to there, you could probably make yourself, 300, 400 pips. So that's risking $100 to make $300 to $400. Now that's an outstanding reward down there. But just be cautious that if it does come down to these levels, at least you've brought it to break even, because you don't want to hold a winning trade and turn it into a loser. So at least bring it down to break even when it comes down to these levels here. And then, ride it as far as you believe you need to, and follow your rules on where to get out if it was to retrace. That's the main key in trading. So that was week 37 of the Forex market review. Again, make sure your trading plan is set up and you've back tested it and you're following it consistently forward. Do not alter it here and there, back and forth, because that's where you start to lose money. So just follow the trade, stick to your trading plan, and all should pay off in the long run. So that was week 37 of the Forex market review. Here at Sane Investment Solutions, we wish you all the best in your success. Take care. Bye-bye.